Let's look at it from an equities perspective. And joining me from my Melbourne studio is Anthony DePaul, and he's Chief Executive of the Australian Stock Report. Good morning to you, Anthony. Talk to us again about that GDP read, but in the context of the equities market. What do you think your clients will be buying in the wake of that report?
Well, there should be good opportunities stemming from Friday's GDP miss. The fact that the US dollar got weaker should be supportive of commodities. We're looking at the energy space as providing the most value. Oil has dropped about 20% over the last month, and also energy sector as a whole, when you look at the indirect exposure, significantly underperformed the ASX 200 performance last week. So we're looking for some investors buying in that space this week and for their fortunes to be reversed.
Yeah, because we did see that commodities jump in the wake of that GDP read. Oil really rebounding from the precipice of a bear market. So if we see buying in the energy names today, perhaps this week, what are your favorite stocks in that space?
Well, if you're extremely bullish on the outlook of oil, then Santos would be our preferred name. The reason being is they're now in a state of positive free cash flow after their significant capex spend in their Gladstone LNG project. Also, they've got the new CEO looking to do a cost-out story. The jury's still out as to whether he can achieve that, but if he does, that should also help positive free cash flow and allow them to further reduce their debt levels. They have been hit price-wise over the last 18 months, so there could be a lot of value there if the turnaround in their business does continue. However, if you're modestly bullish on oil, then to reduce your downside risk, Woodside Petroleum would be our favoured name because they do have less gearing and they also have a lower cost.
And you're talking about gold. Watch that space today. We saw gold up more than 1% on Friday in the wake of that read. We've also just heard from Regis Resources talking about increasing its final dividend to about 9 cents per share, so bringing its total payout for the year to 13 cents per share. So that, I guess, speaks to the story that's happening in the gold space in Australia. Some pretty strong balance sheets and some pretty good prices that they're fetching for the materials.
Correct, exactly. And what it's saying to the market is we now are producing a very healthy positive free cash flow, and we want to return some of those benefits to shareholders. We saw the same with EVN and their announcement. And, you know, leading into their, over the next 12 months, that should very much be a flavour for some of the gold plays. Our preferred name in that space is Newcrest Mining. They had the production update just recently showing record production in the Lihir project. Their costs of production are going down significantly over the last 18 months. So that's our preferred name. If you look at gold, the price action in that sector, we are seeing a significant upwards trend in the last 12 months. And last week in particular, we saw those names bounce off key levels of technical support. So there's still a lot of room for those gold plays to move north before they hit the top of their range.
Okay, so that's good. Newcrest is your pick in that category. So this week we have the RBA really looming large. I mean, we won't even get into all the data that we're expecting here at home today and also in China, Anthony. Let's talk RBA and how you invest in anticipation of a potential rate cut, or do you think that there's a chance that the RBA could even disappoint tomorrow, in fact not cut? And in that case, what type of names would you be looking for?
Yeah, good question, Nadine. So we saw the Bank of England disappoint from a monetary point of view. We saw the Bank of Japan disappoint from a monetary point of view. So does that set the scene for the RBA to do the same? Well, the odds of them doing that are not shared across the market. So we would anticipate leading into that result some lightening of some positions that have had a good run. You know, we see a lot of the banks at the top of their range. We see a lot of the insurers at the top of their range. And we also see some extreme frothiness in the utilities and infrastructure space with a lot of investors looking for that bond proxy. So leading into that event, we might see some lightening of those positions. But if the RBA does cut interest rates, then we only have to look as far as May to see the impact that could have on the market. In May, it resulted in about 2 days of buying. And given where the market is at the moment, we would expect something very similar with not huge increases in the price of those interest rate sensitive stocks.
Yeah, okay, interesting one. Well, thanks for that, Anthony. Appreciate your time to start the week, and we'll chat with you later on.
Thanks, Nadine.
Anthony DePaul there joining us from the Australian Stock Report from Melbourne.